Today's show is brought to you by Direction. We're talking about their breakfast commodity strategy ETF. Ticker is BRKY. This gives you exposure to everything that you put on your breakfast table. Commodities have been the theme of the year so far in 2022, and this is a way to get exposure to that theme.
Yo, the Compound and Friends, buckle up for this episode. Two fan favorites, two of our good friends. Packy McCormick is here.
Packy.
I know you don't know that yet because he hasn't had a chance to jump in. Howie Lindzon's in the house. We professionalized this a little bit since the last time you were here. Howard is the co-founder and chairman of StockTwits and the founder and managing partner of Social Leverage, an early-stage VC fund. Packy McCormick is the founder of Not Boring Capital, also an early-stage VC fund. Packy writes a Substack called Not Boring. If you've been listening to the show, you are already subscribed. If you are new to the show, stop what you're doing, subscribe to Not Boring on Substack. Packy talks about early-stage investing, Web3, and other finance-related topics. Aren't we onto Web 4 yet?
We're on to Web 5. Did you see Jack Dorsey came out with Web 5?
I'm not on Twitter. Catch me up.
So Web 3 is dead.
Okay. It died 2 weeks ago?
It died, I think.
Doesn't have to live. It was stillborn.
It never was born in the first place? Okay.
It was born with a leg.
Now I know these things get clipped and shared and whatever. So Web 3 is not dead, but Jack and crew
Oh, no, we're just going to use
Block,
that part.
Yeah, of course. Jack and crew at Block came out with Web 5, which is their nod. Jack's whole thing has been the VC's own Web 3.
We skip Web 4 is you leave your house?
It's irony.
Web 2 plus Web 3, Web 5.
4 is when you reorganize Twitter and Square.
Right.
Yeah.
Did that happen yet?
No, he just wants to pass that part.
All right. So it's Web 5. Now what?
I mean, I would presume 6. So Web 5, I think, is there's no tokens.
Presume 6.
There's no tokens. Everything's built on Bitcoin, kind of, which is not something that you can really do, but they're figuring out how to build it on Bitcoin. And you have identity and different. I don't really understand Web 5.
You just need a layer above Bitcoin. You could use Bitcoin.
Yeah, okay, so it's a layer above. It's a layer above Bitcoin owned by
11.
to solve the challenge of Web 3 being owned by VCs. Web 5 is being owned by Block, which is the public company that Jack Dorsey runs.
Oh, so they have their own blockchain.
Yeah, their own something on top of
he's
So
Bitcoin.
it's centralized decentralization.
Centralized decentralization.
And Jay-Z is somehow probably involved.
Jay-Z's probably involved with decentralized
he did the
identity.
blueprint. Why is Web 6 afraid of Web 7?
Because Web 7, 8, Web 9.
There we go.
Okay, it's what's so funny is this is just more web. Like, let's be honest, the internet's amazing.
Yeah.
Only Google can be. Let's just have some groundwork. People in a world where we can all just shoot each other up right now with AR-15 because I have one. The fact that we're trying to break up Google in a world that has AR-15s in schools is silly. So the only thing that can beat Google is Google. We have to admit that. Google is the only thing that can destroy Google. Therefore, Web 3 is stupid. It's just the web. Web 2 is kind of stupid, but at least I'm loyal to Web 2 because Twitter, YouTube, Facebook,
Counterpoint.
LinkedIn all came out at the same time.
This part of it made sense to me. The simple example of Gangnam Style, right? Okay, there was 1 billion views. Mm-hmm. The consumers of his video helped for it to go viral. Mm-hmm. Gangnam Style produced the content, and who made the money? YouTube.
No, I hear what you're saying, but it doesn't mean Web 3. There's just new ways to use the web.
Counterpoint.
I agree with you there.
So he puts his video on the blockchain, which is inaccessible.
He'll never do that.
To nobody other than like 12 people who give a shit.
We're still so early. He doesn't know.
It doesn't know. Time
Batnick
out.
gets it.
It doesn't get discovered by 5-year-olds who
Correct.
play it 8 million times each.
Correct.
And it never becomes anything because it's so obscure.
So the Web 3 is
and
just
tucked
web.
away.
You should use YouTube, but if you're the compound, I'm not saying you should have an NFT. God forbid, because it's too hard. No,
There's
but
an
it's
Animal
hard
Spirits
because
NFT though.
Well, we raised
Good.
$100,000 for charity with NFTs.
That's Web 3.
I think it's a great use
That
case.
charity was
That's
Joe
Web
Kwan.
3. What's that? Does that go to Kathy Woods, Endangered
No
Traders?
Kid Hungry.
Endangered
All of
Traders
it.
on CNBC?
Endangered Traders.
She's a genius. Only she could beat Daily Decay.
Where were we?
Wait, should we break up Apple? What about that?
Again, it's over my pay grade. I will just say Apple's a tough one because they're just executing so well and everybody's playing checkers to their chess, and I'm long Apple, and I hate that Warren Buffett owns 42% of it. So yeah, I'd like to break it up just to with him. The old how many? That's two.
But it's also but it's tangible products versus break up Facebook, break up
And
Google
I trust
is different.
Apple more than the government. Let's just, like, all these people who are railing on Apple, I trust them more than my government. I trust Google more than my government. So starting there, I don't need them broken up because I want my wallet on Apple. Because if I'm going to sell an NFT or have an NFT product or have an NFT community, I would like to tell my clients who are at different ages who all love the same thing that they can get it on an Apple or Google wallet and they don't have to buy Ethereum to get into my community because I've just lost 80% of the people that could actually enjoy my NFT.
I asked that question. Nobody gave me a good answer. I asked that question 6 months ago. It's like, okay, let's say you fall in love with a particular NFT, right? You love the art or the artist.
There's already
or
something wrong with it.
Or what it's connected to. No. But like, why can't I just buy this with a credit card? Why do I
You can.
Why do I
That's
have to
not
around
You
in
can.
Discord?
but it should be
On
easier.
Nifty Gateway, you can.
And
You can.
Nifty Gateway is cool.
and wallets and moving money
and
I
flow
just don't want to do
blockchain.
it.
And
You can,
like
Josh.
Yes, you can. But they're not.
So then
but
it's
those
not really an
wouldn't be
NFT.
public blockchains. That
Hold
would be
on.
a private blockchain.
I'm buying a secret decoder ring then from the back of a comic book in 1950.
Yeah.
There's really no difference.
Almost.
I'm in the Beatles fan club.
Yeah.
Like that's what I bought.
But that was static.
Yeah.
I agree with you. That was static.
That doesn't-
In my comedy example, let me try and give you one other
why does there
example.
have to be
Let
a
me give you one
secondary
example.
market for it, is
What
my
was
point.
the best thing of Web 2? We won't remember until I tell you. You won't remember it. What was the best thing pre-web was QVC. You go on QVC, and if your product hit, you were a billionaire. And you sold schmatas to 1 million blue hairs, and they put it in their garage. It was like Raiders of the Lost Ark. Okay, Web 2 comes along. Let's call it Web 2 for now. And what were the best business models? Twitter, Facebook, LinkedIn, huge social media network selling ads. The worst business idea. What were the most interesting companies? We hated them. Groupon, flash sale sites. What was so interesting about Web 2 was you could take everybody on the internet and push them to Fred's sandwich shop at a specific time. That was Groupon's business model. Almost genius. But that was Web 2, the power of turning the whole internet on a thing. YouTube could do it. Everybody could do it. But what happened was everybody went to Fred's sandwich shop at 1. He had not enough bread. He ran out of meat. Everybody took a piss on his door and gave him a 1-star Yelp review.
DoorDash
And so what
just did that, no?
So what
DoorDash
happened
just did
is
that with
no, but
somebody.
hang on, that's
Yeah.
Web 2. So what happened was everybody lost except Groupon. So the traffic was sent. Terrible experience. The guy went out of business.
No food, yeah.
Because he got a 1-star. But that was so close to nirvana. Web 3 would be, in my vision, sending the right people to that place all the time and not charging for you to send them to that person all the time because I run a lean business and I don't need to own the email. He owns my NFT, so I don't care where he goes. My job is to make that member happy, Amex Platinum, and to create millions of Amex Platinums for very different verticals. And that's Web 3, which is taking the best part of what Web 2 turned out to be a mess, Groupons and the flash sale sites and class passes, and reverse it and make them elegant
But again,
versions
if
of them.
I buy a membership to something like that, so let's say you and I agree, Fred's Sandwich Shop is amazing. I want to eat here forever. I want preferential treatment when I come, and I want
like
the ability.
Foursquare Mayor a little
Yeah,
bit.
I want the ability to flex. Like if I go there with all my friends, I want to show them that like I'm all right. So all the good stuff that you would theoretically get from an NFT in the real world. Why does there have to be a secondary market for that? Why can't I just buy it from
Shouldn't
Fred?
be. But there can be open.
Why does it have to trade on its own
Well,
currency?
it doesn't.
It's insane to
but
me.
that's. But hang on.
Well,
But
let's
that's
see if I'm
non-fungible,
happy
and a
on that.
non-fungible theoretically, in my view, and you'll tell me if I'm wrong because I'm learning myself. That's why I'm excited because I'm finally understanding this. Is as soon as you tell me it's a token, I'm out. But even though a non-fungible token is a token,
it's a token.
my comedy thing is not meant to trade. If I do my job good as a company,
So it's not an NFT.
it's a non-fungible NFT. It's whatever it is, a card, art, whatever you want to call it. It's sitting on
Okay.
digitally on a blockchain. When they flash that, okay, I don't want them to trade. I don't want it to be a security. The number one thing I did when I started this company is hire a securities attorney, the best, Ethan at Lowenstein, said, keep me out of jail. This better not be a security.
Yeah, make sure this doesn't have the
But
expectation of
But
a
the
high-
goal
a
of
rise in
creating a
price.
great community is to create such uncommon value to the limited amount of members that you hand out, and they have to trust you're not going to keep printing these, that they do trade because someone who loves comedy has to bid it up to get another comedy person to part with the uncommon value that that person gets from the card. Now, there's different levels, too. So in comedy, for instance, my idea, sharing it because it's all open source, is I like comedy, you like comedy. We know we don't want to put in the work to go on stage every night, but we know we're pretty funny, and we know we wouldn't kill, but we could theoretically kill. Like if Friends didn't do well until it was positioned, or Seinfeld didn't do well until it was positioned before Friends, right? Guess what? That helped. So couldn't you kill if you went on 5 minutes before Dave Chappelle? If you knew the audience was there to laugh and knew you only had to do 2 minutes and get off the stage before
as long as
Chappelle,
you don't have to go on
how much would you pay for that right? And that's another level of NFT, meaning Howard Lindzon will pay $100,000 to own a comedy black card that allows him to go on stage certain times before certain people, a power card that allows it.
What comic?
That's a cool
what
NFT.
comic,
I'm in. I love it.
What comic wants an
idea.
What comic wants an amateur in front of him?
I'm not joking.
Exactly.
It makes sense.
And my job is to make sure that the right people who want that. No, I got to create governance to make sure Liv doesn't buy all the tokens and send Saudi sheiks to do comedy because that wrecks the community. So you still have to have governance.
Packy,
and that's where community comes in.
How can you control who buys the token?
They're not going to stop.
What?
How can you control who buys the token?
You can't, but you can set governance up to know if the club calls you and said your member who we let in took a piss on the stage, that you take away their token. That's how you code it into the blockchain.
Whoever has the Chewbacca is talking.
Packy, tell me why this stuff has to be a. Why does it have to be a token? Why can't it just be a membership?
I think if it's just one particular use case, it could certainly be a membership. I think there is value to the hype. Like in this example, when you asked why Chappelle would want an amateur to go on ahead of him, there's some value to the early hype of like saying it's an NFT, and then Chappelle's like, okay, that sounds cool. Actually, I'll let the NFT holder come up on stage. I think we're still, I mean, I'm going to say we're still so early, but we're in that point where like, the classic Carlotta Perez, like there's all this excitement, a bunch of money attracted to the space, people trying a bunch of things, a million of those things are going to fail. And the excitement's like part of the thing right now. Howard's out there trying something that he probably wouldn't have tried otherwise if this new technology weren't here. A lot of these use cases are going to wash out. And then there's going to be things with utility. There's not going to be people selling secondary versions of this for $1 million. But let's say I just had a kid and I'm not going to be able to go to comedy shows for the next 2 years. Instead of like building up all of
10 years, I would say.
Packy, the problem is, let me just jump in real quick. The problem is, I
Do
think,
you want the
thank
Chewbacca?
you. People have little patience for this bullshit because of all of the predatory scams surrounding Web3, crypto, and because
So
I
buyer
think,
beware.
No, I agree. I'm saying it's
in
not,
a world where you
I'm
can get a bullet at Walmart,
I agree.
like people.
I agree that we're so early and that we have yet to see real use cases. And I'm saying the reason why people have no tolerance for the bullshit is because of all the scams.
Totally. One of the biggest challenges of this thing, right, is that like any other new technology, you can't typically invest in like the most cutting edge technology unless you're a venture capitalist or unless something goes early or goes public really
What was
early.
that point you made in your blog today?
That's exactly this point, that you're like combining this really early technology, smart contracts, which is kind of what all this stuff is built on. Were developed 7 years ago. It was like the first time they were mentioned in a white paper, and we're 7 years in now. And it's a pretty new technology. People are trying things, and anybody in the world with a wallet can go invest in these things. And so, of course, people are getting ripped off. People are the fact that just like the internet and YouTube, and people are putting videos of little kids up on YouTube, same challenge that people are just like kind of shitty in a lot of different ways. And so all the shitty people are coming and doing scam projects.
So hold on, we have to pause here. This is very important. A lot of the cutting edge technology, whether it's new proteins or airplanes or whatever, the average person had no way to get exposure financially to them.
Right.
That's what makes this so unique.
Yeah, and I think right now you
for better and for
that,
worse.
though, cutting edge things fail all the time. Most things are not successful.
Okay.
So that is what protects the average person from getting wiped out from every great idea that they don't understand and want to buy into.
The bull case, not even financially, just like the this thing works case is that we're in this period where there's not a ton of consumer education about what to buy, what to look for, all of that kind of stuff, that there are more scam projects that there will be, that there's not good platforms that kind of filter out. And these can be open platforms and you can take your data anywhere, so they don't have the same lock-in as traditional platforms, but not things that filter out all of the scams. And that stuff will certainly come. I mean, like you can swipe a credit card now to buy an NFT. Soon there will be wallets that actually let you kind of plug in like you normally would, but buy with your credit card, but it's the same kind of like you own the NFT. So a lot of this like infrastructural stuff is being built. But yeah, people can invest in like the really, really, really early version of that. And a lot of those things are going to be scams, which is why my advice is always only either earn your tokens or buy things that you just kind of like and you want to be a part of the community, and don't do it for the speculation.
When's the end date where we could all look at each other and say, we tried.
It's not so early.
We tried. Is it 2025? How much time do we give this?
Well, hang on. Let's just go back one step. Because remember, we do live in America. and you make the good point about, is this a security or not? Like, that's the first thing. Get a goddamn lawyer, because this is like not, this is gray.
Yeah.
And if you live in China, gray means go. If you live in the United States and you're dealing with financial things, gray means slow the down. And if you want to take that risk, and people are out there firing off fake securities, or I think they're securities personally, not every NFT, but I think all that shit that's trading is a damn security. But again, I'm a big boy and I avoid them, right? Or I pay 2% and 20 and get professional to do it.
Right.
Okay. The most important thing about Web3 is it's been overhyped. It happens.
Like everything else.
Okay. Let's go back to 2012. Go look up Fortune magazine, Google Glass Fund. You'll see a picture of Mark Andreessen and Ben Horowitz on a cover of Fortune wearing Google Glass. Didn't work out so well.
Yeah.
Okay. The Web3 so far is Google Glass. Okay.
Oof,
is it going to
tough?
No, but I'm just saying, if you had a Google Glass Fund in 2012, your returns are not very good. If you had a BlackBerry, if you were running the BlackBerry Fund in 2010, your returns sucked. If you have a 2020 to 2022 late-stage growth fund or a seed fund, likely your returns are going to be below the last 20 years, okay? The jury's out, but the expectations were high. The amount of capital flowing in were excessive.
It's a
and the
lethal
valuation
combination. Too much money and too much excitement.
And at the same time, you had shrinkage at the top end. You have multiple compression going on at the same time. The
bad.
valuation, so you have multiple compression coming this way. You have
Earnings.
startup valuations over here, and interest rates, NPV, which every accountant has a spreadsheet and plugs in 4% instead of 0%. Like, so there's such a disconnect. Like, for years, I'd come on the show and go, what's cool is private markets are connected to the public markets. What we found out is these idiots aren't reading the data. Like, founders who should be watching the stock market are still pricing their startups as if the public markets are still at all-time highs.
So
I never
Howard,
thought that would happen. I never thought that would
Jason
happen.
Calacanis tweeted, the experiment of overfunding startups, especially crypto projects, has been an unmitigated disaster.
Yeah, but he's reading my tweets. I've been saying this for 2 years. Come on. You can't give a founder $5 million because he says that's what will make him feel comfortable. Okay, that conversation happens every day. I go, when did a founder get it right to feel comfortable to do a startup? It's supposed to be so uncomfortable.
When there's 50 people trying to give them money and they
Correct.
get picked.
So we became
top five.
price.
It went
seed
backwards.
investors were all guilty a little bit, some more than others. We became price takers, not price makers. Okay. There was price discovery, the Fred Wilsons. Up until 2008, 2009, we were in a price-making world. This was the price. Then YC came along and all Techstars and then this abundance of everybody should have a startup. And guess what? We lost our way. We became price. It's basically, Tiger and all these are like Citadel, right? Like, except they're on the other side. They just became price takers. And if you're the taker of a price in 2022, you should just trade options on Robinhood. You got the same odds. Because, by the way, you're now sitting with 10-year options that may not be worth something. You don't even know the outcome for 10 years, but really, at least with trading options, you know right away you lost the whole YOLO.
Yeah.
So I just think that's really scary. And there was really sloppy behavior in the last few years, but everybody's to blame. And that's where we're at.
Doesn't this seem like, though, we're fast forwarding a typical down cycle and like we're going to have 3 years worth of pain in 6 months?
No. If the VCs wise up and talk to the founders and explain to them the reset. But if we continue to fund startups at 2020
Isn't that what Twitter
prices,
is? Isn't that what Twitter is now? Isn't Twitter basically
No. You guys think it's bigger than it is.
subtweeting their,
Wait, hang on.
founders?
There's
You can't
there's
have a
5
reset.
DJs. But Howard, there's 5 DJs that are playing the music. It's Tiger.
No, it isn't.
How many is it?
Guys, seed investing has to reset. Public markets have reset already. Like, if you ask me what I want to do with my capital today, if I was running $200 million, I wouldn't say start a seed fund. I'd say go trade public stocks. At least I know how to trade them because at least risk-reward wise, I can get liquidity for the risk I'm taking. In 2006, I would say you'd be nuts not to fund a startup when there's Twitter, Facebook, LinkedIn, and you could build on top of those platforms and they didn't know how to price their customer acquisition. Like, there were so many ways to grow. StockTwits built itself on Twitter without ever spending $1 in marketing because we were using Twitter as our lead gen engine.
You don't think the reset has been very widely telegraphed by almost every
come
voice
listen on my
in
pitches.
VC?
I need $5 million at a 15.
No, forget those people, not the founders.
Well, you need that reset. Otherwise, the returns get muted for 10 years.
So the pre-IPO stuff is getting reset. That already got reset. So
Yeah,
where
right.
are we in the chain? Are the C's and the B's getting reset?
Yeah. They're not
Hell
happening.
Yeah.
So until we get a seed reset, though,
But
I'm out of
seeds are
business.
so tiny. What if they don't get reset? They're so tiny.
Well, that's bad because then you have these overfunded startups that never make it to the next level, and then eventually you have a supply glut. It's just moving stuff through the system. I'm not saying it should be perfect, but if you ask me what needs to happen,
And you
the
don't
seed
think it's in
investors, the
progress.
YCs of the world, instead of writing their blog posts saying now it's different, reprice their rounds.
So the
you
seed
wanna-
round is the
seed
asshole.
round should
That's
be
the
a-
asshole of the snake. We're not
Yeah.
there yet.
If you zooms down 80% and your
That is
video
such
startup
that
is
is such
still
a lovely
priced,
visual.
Well, you know, the rabbit moving through the snake.
No, but listen, if Zoom's down 80% and your video startup is still priced at 20 million pre because you're not checking the public markets and VCs are willing to fund it at 20 pre, we're f***ed. Meaning that should be down 80%
How
too.
much dry powder is still out there, though?
So much.
Too much.
That's what I'm saying. So you're asking when this gets reset. If there's dumb money still putting money to work in the early stages, we're going to have muted returns for years.
Well, you know there is because you see it.
Yeah, I'm on the sidelines.
This is your opportunity. We want to.
No, I mean, I actually agree. I mean, I think late stage is not even happening, and if it does happen, it's happening at much, much, much lower prices than it would have happened. And there's some companies who just, everybody was guilty. To your point, some companies are unlucky enough to have to go out now or go under, and so those companies are getting reset already. I think you're right. At the seed stage, I think we're certainly seeing fewer 100 pre-seed. That I think has gone away at least. But I don't.
Never have existed. I hope. It
Of
didn't
course,
exist,
but I also think, I don't know. There's like a big founder psychology that needs to change at the early stages, where it just feels.
it's not founders.
Yes, it is.
are
These guys were taking money
Founders
off
are
the
nails.
table during
Founders are
rounds.
nails.
That's true, and
Okay,
that
that's still the
shit was-
VC.
that shit was
Only
sick.
a dumb VC
VCs
would
let that
allow that
happen.
to happen. Come on, guys.
But
Come
I'm saying-
on.
what I'm saying
They're
is-
dumb nails.
I don't
These are-
think-
these are guppy fish. Okay, we've turned them into monsters because we treated them like they're kings. Okay, they're the same. I hear.
Well, Andreessen said in any given year, there's only 5 that matter, and your job is to make sure that you're in one of those 5.
And that's their game. That's their game.
But
They're
everybody
playing
can't be
metagame.
one of the 5.
Guys,
They
look-
can afford to do that because they can raise money the next fund. Packy and I, if we don't perform, we can't. Well, there was a period where you could. Let's be honest. There was a period for the last 3 years you could raise your second and third fund without returns on your first fund. That's gone. Would you admit?
We'll find out.
Okay, that's over. And God bless if it isn't. But that's just bad behavior. You got to see
Well,
returns
you use the word
before
sloppy.
you.
The word is sloppy. You're
Sloppy.
right.
And it's not the founders.
No discipline.
Founders, if you hit them over the head once and go, you're an idiot. 10 times sales doesn't exist anymore, let alone 40.
Shut up for a second. Howard, look at this chart.
Yeah.
In the fourth quarter, $180 billion of venture funding happened globally. And even still in Q1, it was 140. So where does this money go? It's got to get deployed.
Now it's what is this?
That's what I'm saying. We're going to have
Q-
muted returns for another
it's
2-3
so
years.
much f***ing money.
Yeah, but it's still coming in.
That's my point. It's still coming in.
So you stay out. I mean, I don't know what to say. If a tsunami is coming, doesn't mean it lasts for just 30 seconds.
But
a
don't your-
tsunami could just stay around for 3
don't
months or
don't your
3
investors
years.
pay you to invest?
Okay, this is a great question because we internally at Social Leverage, my partner Tom would come to us last year and goes, I don't think we're working hard enough. I go, Tom, I don't think I've ever worked harder. Saying no to these idiots is hard work. and saying no to 20 pre, no, but I mean,
Is that
isn't
the hardest
saying
work
no
you've
part of
ever
the
had to
job?
do?
Wouldn't Kathy Woods be happy right now if she'd said no more?
I like how he keeps calling Kathy
Well,
Woods.
I mean, actually, what I'm competing against,
No,
and you're
it's,
telling
it's
me
wood. It's wood.
Oh, whatever. But
Oh my God, the marbles.
Dude,
John,
I'll-
the marbles.
John, I'll play you after.
hang on. I know I'm being animated here, but I rarely get to come on.
Go.
here. You are saying everything right. But what it means is the money's the money. It's going to stay in the game. People get paid to deploy. Mark Andreessen's not writing checks. You know who's writing checks? His venture partners and the young kids that they hire. You know who's going to throw under the bus in 2 years?
Packy.
Them. And he'll say, we were wrong. It was a Google Glass moment. And he's going to go on to raise his next fund. Just like there was green funds in 2020 or 2000. Remember all that? They were early. And that's all Andreessen's going to say. We won't have that luxury. Therefore, I had to sit on the sidelines because I know my LPs will yell at me. They're going to yell at me either way, but I'd rather try and do the right thing. And it felt like valuations were ridiculous.
They
and
were.
we've talked about this, and I couldn't, when you're putting money to work for 10 years, and I've seen what a Robinhood looks like or a customer looks like on the end game. If I had paid triple for that deal, my fund returns would have been stock market returns. And what's the point of doing it if I'm going to get stock market returns? So you have to say no at certain valuations.
I don't think the message has gotten out yet.
Not even close.
Because that's
that's
all
why I'm on
I
the
hear
show to
about is
deliver it.
rescinded offers, people
That's not
predicting
ouch.
people
That's bad
predicting
behavior.
down rounds. People predict that's all I read about now in the
Okay,
tech
good.
press.
I don't believe it.
Howard, to your point about things being ridiculous.
You also need a new platform. By the way, 2006 was magical. Cat videos and this, YouTube, Twitter, Facebook, LinkedIn. What we have right now is Ethereum. How much are the gas fees? We're all making fun of it. There's no platform. And go away. Try and launch a company today. Where are you going to buy users? How much are you going to pay for that user? It's a f***ing disaster. Yeah. So there is no way to grow a business. Hence, Web3 should be about being the next Instagram. How do I build a $200 million company with 2 employees? That would be cool. And that's where you. And,
but how do you attract capital?
That money problem. That's that money problem.
How do you attract capital for that?
Those people are making up things to put $10 million into a company that only needs $1 million, and that's a problem.
So, Packy, you're deploying money quickly. What are you seeing out there?
Not anymore, but I mean, even me have slowed down. But I'm talking to a lot of founders still. I'm seeing early stage prices not come down nearly as much. But I do think what my point on the founder psychology here is that if you say like, look, we're giving you 2 at 8. Founders are just not. They've never grown up in a world where they have to sell 25% of their company.
No, take it.
Yeah,
I agree.
That I think that's the hard part more than just like not having.
So they won't take it.
I think it's less. I think it's less maybe the headline price and more the dilution that they're going to have to give up early when they're just not used to that. I think that's the tricky part because it feels irreversible, right?
That doesn't mean the VC should write the check because the founder
No. I'm not saying that's the case. And
you're saying they thought like a year ago, I'll sell 10% of this.
Right.
But hold on. If you're selling 2 at 8, what do you even have? An idea? Maybe a product?
Well, you've been trying this too. Like when I did Twitter at the time in 2006 or 2007 was 3 on 17. That was absurd to me. And if we think about what Twitter was back then.
Wait. It's valued at $17 million and they were raising
3.
3. So what percentage of the company were they selling?
15%.
A little bit more.
Okay, but the product was built. They had tons of users. It was already fail whale. And I still couldn't get my head around 20 million valuation. Like this week, there's still deals getting done at 40 million
pre-revenue still, though, also.
It doesn't matter pre-revenue. They had hundreds of thousands of users.
Yeah.
It was viral.
Yeah.
And people, I couldn't get my head around the 20 million. So I'm not right a lot, but I definitely have seen things. And Twitter, if that's your excuse, I'm like, guys, you don't remember what Twitter was like. Everybody was using it and complaining about it. That's why it had traction. It had a product market fit.
So we're going to talk about fintech in a second, but I'm seeing some deals where it is $70 million pre, and not knowing anything, I'm like, wait a minute. At your A round, this would seem like
before it started.
This would seem like a wonderful exit. If somebody would one day pay you $70 million, that would be phenomenal.
I sold Wall Strip for $5 million cash. My investors made 8 times their money in a year. I did the deal at a 600 grand pre. Okay,
we have people writing you checks for like 10 G's.
Yeah,
10
G's.
In 1936, that was a lot of money.
So great.
No, but I'm just saying there was the art of returning capital has been lost. The idea is it's not all about the founder. The LPs are taking risk. The VC has to think about their LPs.
Well, you know what became the headline? The amount of money raised and the people that were in the deal.
Correct.
That's it. It's
That
all
was-
just for fucking vanity and ego and the tweets.
But don't you think when
that's not the media's
institutional
fault.
money
That's-
came in to see like then there's like so many steps
That's cycle.
removed from
It's
the
a
end
cycle.
from the end holder of the money.
It's a cycle.
You don't even know who the investor is. It's like 8
But
layers.
a great
in between.
investor's job, which Kathy Woods isn't, a great investor's job is a great investor's job sometimes is to recognize the macro and just say, I got to stand aside. It was not easy for social leverage.
Credit to you.
It's not credit.
It
it's
is.
just our job.
It is.
Sometimes you get paid. And I learned by the best. Fred Wilson used to take a year off, 2 years off. And he was like, nothing inspires me.
Hang on, it is credit to you, dude, because the music was playing and you weren't dancing, so it is credit to you.
We
But
still got hit. All the companies that were late stage, Robinhood was $60. It's now $7. Obviously, I sold on the on the way up.
You could have collected a lot. You could have collected a lot of fees and done a lot of deals just for the sake of creating
What we haven't-
motion.
Here's how
and you
far
did not
behind
do
I am.
that.
I am
And you
still
did not do
investing
that.
out of our 4th fund. It's 2 years old, and we've deployed 18% of our capital.
Wow.
Okay?
So credit to you. Come on.
So instead of being down 50%, I'm not down. And I think that's part of my job. Now, the risk
And that's
to
not
me,
you being lazy because you're constantly
but
meeting
here's
people.
the problem in the industry. The risk to me, sorry to hog this, but people should hear this. The risk to me is that my LPs go broke investing in other shit, and then when I finally make a capital call, they can't make my capital call.
Cleaned out.
Wait, hang on. You know what we haven't
That's
spoken
scary.
about?
We haven't talked about any of that. That's the risk I'm taking, Josh. Do you get that risk?
We get it.
That's why people rush to put money to work because
Right,
I go.
because you're not
if I
going to
don't put
be
it to
somebody's
work-
only fund.
Call it all. Call it all. Call it all. Here's what we haven't spoken about.
Start calling
One
it.
of the growth of venture and all of this stuff was because interest rates were at zero for so
Correct.
long, and people needed to make returns. So bonds went into dividend
Correct.
stocks. Dividend stocks went into growth equity. Growth equity went into venture and crypto, and so on and so on.
This is, John Street Capital. Yeah.
Right.
He'll be at the event tonight.
Oh, cool. So now we're on the other side of that, and it's been a minute.
Yes. And by the way, I have a little money. I like
to brag.
T-bills.
Not to brag.
People used to say, I'd guess on my podcast, oh, Jack. I didn't even know what Jack was. It's T-bills. I love Jack. And the thing is, we're at a price in the market where bonds aren't paying me enough. So cash was good, like I've been like for the last year, and stocks aren't low enough. So we're kind of in a tween zone. My rates
Have
tick
you
up 2 more
Let me
percent.
quote
Have you
Yo,
considered municipal bonds?
Yeah, lately.
Dude,
yeah.
they're not bullshit anymore. Let me
Yeah.
quote you.
I can get 5%.
That's what
Yields,
I'm doing.
yields
Yeah.
are too low and stock prices are too high.
We're getting to the point though where yields are getting interesting. I mean, I'm looking at real
Howard,
estate.
5 to 5.5% on
Lock that shit
muni
down.
bonds is
Tax
a
equivalent. You can do
tax
it.
just
equivalent
bought my
yield is
first set.
10%.
Yeah.
I just bought
interest.
my first. My
what that
money
does to the hurdle rate
manager,
of-
Freddie, my money manager, who I got on Groupon, calls me one day. Goes, Howard, I got a sandwich for you and an opportunity zone.
Well,
no, the
hurdle
muni
goes
bond,
higher, though.
I'm f***ing buying a muni bond. I'm 56. I'm like my grandfather at this point.
But the hurdle on stocks, if you can earn 10% income, tax equivalent yield, so no federal
Hang on,
income
it's not,
tax
it's not
on
that,
munis.
it's not that high.
It's a lot. Yes, it is.
No, it's not.
43%
I'm looking at some
tax
muni
bracket,
bonds that are like
5.5%.
5%. Yeah.
Oh, because you're buying with leverage.
So close that muni bond fund.
Okay, fine.
All right, here's the pitch.
Here we go. Here we go.
Hold on. Category A. Here is a technology stock trading on the NASDAQ. Came public as a SPAC 2 years ago. It's $4 a share. It's $1 billion market cap, doing $9 million in revenue.
Is it a SPAC or is it a regular SPAC?
Whatever it is, de-SPACed.
Kathy SPAC.
It's a company. And you have to hope that at some point the revenue growth will go up, the market cap will have stopped going down, and there's like an opportunity for capital appreciation the next 3 to 5 years. That's category A. Mm-hmm. Category B. You're a New York State resident. You're at a 43% tax bracket, which is the top.
I'm there.
You can buy a fund that owns munis. Maybe there's some leverage to juice the yield, and you could basically net out at you're taking risk, price go up and down, but you're earning about 10.5% interest. The hurdle to buy that piece of shit stock is now so much higher than it was even a year ago, and that is what changes the psychology.
You know me, I'm pretty aggressive. There's no contest. I'm literally looking through individual muni bonds. I can't believe I'm saying that. That's ridiculous. If you told me I would be saying that a year ago, let alone
You
10
need like a
years ago.
broker named Seymour just calling you
Well, there's
all
Gurton.
day.
I'm friends with Gurton.
Oh, yeah.
There you go.
Close-
What's the most
close
attractive muni bond right now?
I'm a revenue guy.
There's an
Arizona.
NFT muni bond. There's a California
Arizona
NFT muni bond.
Water and Power.
NFT Water and Power. It's a mining company. It's a digital mining company attached to the water.
I'm,
PPP, yeah.
I'm bullish on LaGuardia.
All right, you know what? I have a chart. Kathy Woods, put it up.
Oh my God.
Give me a 3 Woods, a 3 Kathy. Kathy Woods should have a Callaway line of clubs that just go down and to the left.
What are we showing here?
Horrible. Howard. be
No, you know
nice.
what? Let's talk about some of my charts. Could you believe this? This blew my fucking mind. Not this. Throw out my Facebook chart, John.
Is that Yahoo
Oh, yeah.
Finance?
Flat.
Howard, look at me. Look at me. I'm the captain now. All of Facebook's outperformance since its IPO is gone relative to the NASDAQ 100. All of it. One of the best companies of all time. Every last
Back to
dollar.
inception.
Yeah.
Back to its IPO price.
Okay, what's the problem?
It blows my mind. That doesn't surprise you?
But tobacco did
happens
this
to
a few
everything.
times. Like I've been buying Facebook down here finally, and I don't use the product, I'm scared because you don't know if the best days are behind it.
It's a
but
screaming-
that seems like
screaming buy.
next to a municipal bond. That seems like a good buy to me.
We were talking about this
But I am
morning.
56.
I think Facebook is a screaming buy.
11. All right. Let me.
I don't know what.
So what are we
screaming,
missing
I
then,
own
right?
it.
11 times earnings.
The meta name change is terrible. They should
It was
still
$1 trillion.
own the name.
It was $1 trillion market cap at its peak. It's about $450 billion now.
Yeah, I
It's
think
lost
it's
a
a
Wait,
ton
$300
of.
billion.
let me adjust my statement. It's a buy. When
Yeah.
it stops going down, it's a screaming buy.
Does history suggest that a company like this comes back though?
Yeah, listen.
It does?
They could do a wallet. They have so much opportunities. They just have to wait and see. Like I said, crypto has been a disappointment at scale. If you live in Venezuela, again, like not to steal the mic, but we live in America. Crypto doesn't make as much sense to us here, nor should it. Visa, MasterCard, Chamath, all these guys saying short Visa, MasterCard. Sorry. They work pretty damn good here.
It's too easy.
Okay, so it's hard for Americans, or at least someone like me who's used to investing at 2 or 3 pre, and used and living in the YouTube era still, to look at crypto and be honest about really understanding it enough and see enough users in this to go make a difference. And so in that world, that's a world that I believe we live in. And we're not there yet.
Hey, look at this chart. Look at the free cash flow yield of Facebook.
Oh my God.
No, I'm low.
9% free cash flow yield.
But it's not working.
It's not working.
It isn't
it's not
working.
No, of course not. But come on.
That's what I'm trained
attractive.
to buy. That
It's attractive.
Yeah, I have to buy that.
Let's do some crypto stuff because
More?
Well, I think.
By the way, I'm an investor in Packy's fund. He's an incredible writer.
I want to hear from Packy. I want to hear from Packy on this.
He's about to call you Packy Woods. He's like 5 seconds away.
He's not Packy Woods.
Oh my God.
He's Packy McCormick. No, but I'm saying I felt like I was early to the Packy train in Fund One, and I used to
Dude,
send
I
him
bought
emails.
Packy
I
pre-IPO.
knew him when he was at his old company. Like we talked
Yes.
way early.
Oh, shit.
Michael
So
was
that's part of
bullish.
my job.
Michael was bullish. Packy.
I passed on his last company, which was having sex in a random room. What was the name of the company?
No.
Breather.
Really?
I was
Yeah,
on
that's a
so
thing.
long.
It was not
breather.
having sex in a random room.
No, I
but-
wanted to. I would have been a user, but no one would have used it with me. I was a driver down of market price. I was breathing and there was no breather. So I would say breathing.
We have to talk about stable coins and what's been going on in the last week or so, because I think most of our listeners are not hardcore crypto people, but they probably all have dabbled, as have I, in the last 2 years, 5 years, whatever. What do we think? Where do we think we are in this particular crypto crash? I know the next one is always around the corner. Historically, the crypto crashes have led to higher prices every time. So it's not a bad thing that it has these crashes. But what are you thinking in terms of how much has enough damage been done yet in this particular episode?
I've seen estimates that go as low as $10,000 Bitcoin and $400 Ethereum. We're probably sitting at $1,100 ETH and $21,000 Bitcoin right now. So there could be 50% down
Even from here.
From here, and this could be the bottom, and we could be slowly, I think, just churning here for the next year. I don't think we come out kind of to Howard's point. Like there's not a ton. There's maybe 30 million people have a MetaMask wallet, and that's kind of the passport.
Zero.
It's small,
Tiny
right?
still.
I don't think we come out of this bull cycle on or out of this bear market into the next bull cycle on financial and speculation only again next time. I think there need to be things that have relatively broad, or at least fast-growing kind of regular person adoption, where a lot of the crypto fades into the background. It's still there, but you have like a decentralized social product where, just like Twitter in the old days, people can come in and build clients on top of it, and there's this kind of shared user base that anybody can build on top of. I think there's going to be experiences like that, even just kind of seeing
So this
the early stage
2000 to
market.
2022 episode was almost 100%. NFTs fine, but almost 100% about hedge funds, speculation,
Leverage.
betting, trying to front run institutional adoption, trying to front run Wall Street. The whole thing though was about there are no products.
The price run right now is, in this last cycle, was, to your point, 0%,
crazy.
0% interest rates, right? Like, where do you put the money?
But it was 5,000 Bitcoin to 70,000. It was like the big one.
It was the big one, right?
Yeah.
And some people were calling.
Carvana had the same percentage move, and that's worthless. Like again, we're putting too much on Bitcoin.
Yeah.
And by the way, Kathy probably owned it all the way up and all the way down. Kathy Woods with an S or a Z. No, but I'm saying Carvana had the same percentage move, if not worse, and that was full of crime. So as much as I like to make fun of
Wait,
crypto
what
and the
was
people,
full of Carvana's
Carvana's
full?
like a scam.
There was
Hey,
a
we're gonna
dead
sell
person
you
in
this
every
car.
trunk. You
We're
know?
going to put his car
It
that
came with
has
dead people.
Max's
Hold on,
burn
why
holes
is it
in
a-
it
why is it a-
onto the
why is it a-
internet, sell it for more than it's worth.
That's not what they're
That's a
doing.
good business model.
That's not what they're doing.
Okay, have you looked at the stock price?
Yes.
Have you looked at the
Oh,
way
I
they
know the
dealt
stock
with their
price has
debt?
collapsed.
Dude, it's a crime. The guy's done the same business 6 times. Okay? Whether they pin it or not is like the capital attacks. Okay, like we haven't done a good job of enforcing the law. So, like, why aren't we talking about Carvana? The guy's done the same scam for 6 times. Why aren't we talking about Wayfair? Why aren't we talking about the fucking Galloway representing, telling you to buy restoration hardware at $700, it's $200.
Because not everybody's aping into Carvana.
Yes, they are.
No,
Sorry.
they're not.
Come on.
Dude, do you know anybody that owns Carvana?
Yeah, anybody who owns an index fund owns it.
Oh, come
okay,
on.
stop
Eric
it.
Jackson.
Like,
Who?
Eric
Jackson.
Eric Jackson
but
just
anyway,
started
I'm
buying
just
it.
saying they're down just as much as Bitcoin. Okay,
That's true.
And so I'm just like enough. But it is up to founders and VCs to price things right so everybody can reset and get returns. In the end, you have to have returns. Otherwise, we're going to buy muni bonds. And if everybody wants to buy muni bonds, great.
I do think, because I've never been a Bitcoin maximalist or price on Bitcoin and ETH anything.
Not to brag.
Not to brag. But I do think one of the interesting things about just crypto as an investment over this past cycle is that when there's all of that money sloshing around, you have to put it somewhere, and you have this one asset class that has no agreed upon valuation metrics or way to value it. It is a really interesting receptacle for all of that money.
But why do we have to lever it up 100 times?
But who's we?
Yeah.
You and I wouldn't even know how to
Well,
do
here's the
that.
difference.
Criminals doing
This
their
is
thing.
the difference. The interesting thing about this crash is that it is institutionals. It's institutions blowing up.
Yeah.
Yeah.
It's not retail. Retail are not dumping. They're accumulating.
I'm with you.
It's all institutions blowing the up.
It's been a few, right? Like 3 hours. 3 hours capital is like on the run
No, but
somewhere
Packy, that's
abroad.
a serious question. I can't get a good answer to this one either. This is the most volatile asset class on earth. Why also does it have to be the most leveraged? Why can't people just accept the one-to-one volatility and try to make money there?
I've never bought crypto
Not
levered.
you.
I know,
Explain yourself.
Not you.
No, but
What is that mentality?
To Howard's point, it's a wide open marketplace. Like, why are people who shouldn't be trading options on Robinhood?
And then also, why are they blaming Robinhood? But,
And, yeah.
like confetti is the problem that we have a bubble. Confetti was a bad idea, but it's not the reason we have trouble. You're probably part of the confetti gang.
I'm
Like,
not a-
we're mad about confetti.
I'm team confetti.
Yeah. Come on, people.
I'm not a libertarian by any stretch of the imagination.
grab your
but, like,
AR-15 and let's keep the confetti. I mean, it's
I'm not a libertarian, but
ridiculous.
I do think that there's some there is some personal responsibility here when people talk about retail getting blown up in crypto.
I agree.
Most retail doesn't know how to get into a 10x levered whatever in crypto,
yeah.
And so I think there is this degenerate set that got blown up, and that is
They're pros,
3 Arrows
though.
Capital, that is Celsius, that is the Luna one is tough, but if you're trying to get 20% yield on a stable coin that's backed by another coin, that is risky, and you shouldn't assume you shouldn't move all of your life savings into that. So I do think there is a degen set.
Luna's down? I got to get a better internet.
Yeah.
I'm just amazed.
And
Howard
Internet.
DM'd me last, what was it, 2 months ago, and said, Anchorage, you can get 20% yields. These things are stable coins, risk free.
Yeah.
I looked at the market. I looked at the macro as a great investor, and I said, I don't know.
I publicly said that. That's how I publicly said that. Listen, I have made so many mistakes. We should look back at this, and luckily these mistakes are made by kids in their 20s, okay, with $300. We joke about this all the time. It's not pretty. There has been financial crimes going on, but they've been going on forever. You know who pays the price? Honest people. Listen, I'm not perfect, but cost of raising capital just went up for my firm times $1 billion. You know what I mean? I'm pissed too. We all should be
everybody,
pissed.
yeah.
It all went up for everybody. The same as the Bernie Madoff tax. You don't trust a hedge fund. This is another moment where good guys get screwed.
It's harder for
and that's why I
everybody.
joke
Yeah.
about Kathy Woods. And her one job is not to be down 80%. God bless her. She was up and she bought into her own bullshit. Let's be honest. You can't be down 80%. You can't call yourself a professional and be down 80%. It's almost hard to do. And call out Tiger too. It's just crap. It was just they were trying to index the world, and that blew up. At least they had a strategy. They were trying to index the world, and that was kind of a cool strategy.
I mean, they're a victim of their own success, right? Because everybody
tried
played their
something.
game.
They were
Everybody-
also trying to corner the market on create an ETF for late stage growth, and it blew up. Okay, the market's not big enough.
It was
yet
the
for it.
7-minute abs to 6-minute abs.
Okay, but it was, it was a good effort. Kathy's believed her own. Like the Garrett Von Wagners of this era. Remember, they were like in '99, you would look up your mutual fund on Wall Street Journal, it'd be up 8% a day, and like Garrett Von Wagner became a celebrity, and all the other names. Yeah, and they were our gods.
Yeah,
and there was only one that got out at the top, Andy Kessler. Right, those are the people I like. You can go read Andy every week in Wall Street Journal. Like I like to follow people who have been through a cycle: the Fred Wilsons, the Brad Felds, the Bill Gurleys, the Andy Kesslers. Like we should be, but you can't find them on the internet. You actually have to go look for them. Even though it's free, you got to go look for them. Shame on us for not making those people the people that we should see. Fred writes a free blog.
People who are most willing to constantly be sharing their opinions on everything
are idiots.
Are also, it's not coincidental, but they are concurrently the people who have accomplished the least and are most insecure, which is why they don't shut the up.
Like if you ask who I read, I've always said the same thing. Fred Wilson. Well, what does Fred think about Bitcoin? I don't know. I'm sure he'll write about it on his blog when he changes his mind. He doesn't change his mind every day.
Yeah.
And he could be wrong, just like Mark Andreessen was wrong with the Google Glass Fund, just like the people who started a BlackBerry Fund. Tech needs platforms. If there is no platform, there is no growth. And right now, YouTube, Twitter, Facebook, LinkedIn, we make fun of them. They are your best ways to get customers. And TikTok, guess how expensive it is, though, to grow on their backs? Expensive.
So, Howard, long-term capital management, you were around back then. They lost $4.6 billion when it almost went to zero, right? They were bailed out.
Bankrupted the country.
In 1998. Tiger, I think, has taken the crown for the largest dollar declines, estimated on 19.7 billion. So it's probably larger now.
Yeah, it's probably
19 points. I mean,
yeah, it's real money. No, anything over 29 billion is real money.
Did we relearn this time around, or some people didn't need to relearn it, but just like didn't we also relearn that the more something has to be promoted, probably the less good of an investment it is? This is like
I mean YouTube. We sat in our room, and you probably love YouTube too. I'm a little older than you. How old were you when YouTube came out? 20?
When did YouTube come out?
2005. 05 is when it flew up.
I didn't know anything about the internet. I'm fucking trading the stock market, miserable, running a hedge fund. And it was just cats, women pointing their cat. And I knew it was big. You didn't have to, you remember? And we were like, oh, and the internet was like, oh, it's all fake content. And it's people filming their TV and it's takedown, but you knew it. It was just, and everybody was copying
the
YouTube,
SNL video.
Rever, and there was VO, and there was like, it was a thing. Okay?
The SNL video Lazy Sunday is what made YouTube, like put YouTube on the map, because everybody for the first time ever could share a video via a hyperlink.
Okay.
There's no way to do that prior.
So crypto hasn't had that moment.
Correct.
There was the Netscape moment, there was the YouTube moment, and we haven't had a moment. Ethereum paying $100 gas fees, whatever that means, for a $3 thing is not a moment. Okay? We're having a moment now. The crash is a moment, because it hopefully resets things that will create some reasonable expectations. This is why I'm finally starting another company. You think it's fun starting a company at my age? But I feel like I'm so excited finally again, because I understand what an NFT is. I don't understand the token part. I don't buy into the platform part. I don't like a lot of things about it. But I can finally go back to my roots in comedy, biking, and golf, the things that I love, and build something that actually could be lean, could be profitable, and could be exciting and a win-win-win. That's the greatest thing ever. I'm finally off the bench again.
I don't know if
I'm finally off the bench.
Do you remember when you tried this with Twitter? You built a comedy Twitter?
Yeah.
And I was on there.
Laughster, and I've tried it a few times. It was great.
You had comedians tweeting jokes.
Here was the problem with that. Not all comedians are good at tweeting. Okay?
Well, also, if they were really good, they went to regular Twitter.
But again, like Jim Carrey's the funniest guy in the world, but he's not funny on Twitter.
Right.
So Ricky Gervais is good on both. But you're either funny or not funny. There's no folk comedy or this. Okay. Comedy also needs a stage. We've learned that. Zoom comedy wasn't great. YouTube comedy is great, but Zoom comedy isn't great.
Needs an audience.
Even Norm
doesn't
Zoom
necessarily,
was tough.
but comics want a stage. And digital could be great, because there's all kinds of benefit. So it's the perfect time. And guess what? Comedy has been just shat on for the last 10 years. We need American culture. Basically, all we have is comedy. We need more George Carlin.
Did you watch the Bob Saget thing on Netflix?
It was great.
Jim Carrey, I haven't seen him on stage in 20 years.
And Chris Rock said, I wish, Chris Rock had the line of the day.
He said,
I wish he had
Bob
died
dying.
5 years ago, so Jim Carrey would have come out of retirement.
Jim Carrey killed. He was so,
I need to watch that.
He was so funny.
So comedians are ready to come back. Okay, they're taking your phones away when you go into a club. Clubs are busy. And guess what's wrong with comedy? The comedy club owners are generally, if you watch the Mitzi Shore documentary, you see it's controlled by one person. Okay, so there's certain industries that need this. Okay, music, I'm sure, needs it too. The problem with music, it's so big. Everybody's trying to recreate Spotify on the blockchain. That's just not going to work. Spotify is amazing. Okay? Like, if you were going to tell me a stock to buy other than Facebook, I'd say Spotify. They got like 400 million users. Stock's trading at $20 billion. It's worth more than $20 billion. So there are values in the market. I'm not saying it's a screaming buy. I'm just saying that's a brand that you can't recreate on the blockchain or anywhere else.
That was one of the first
against
time.
Apple. They're competing against Amazon, Tencent, and they're still growing. He's the founder's the original founder. I don't know what it's worth, but that ain't going away. And crypto ain't going to destroy that.
Duncan, cut his mic.
Sorry.
No, Spotify was the one where the first time, I remember we were on a party bus from the beach back to the city, and we had Spotify, and before we had to like bring CDs onto the thing, and then somebody had Spotify, or maybe we didn't have to bring CDs, but like we had to download songs to Apple Music, and then we just had this thing in our hand. We're like, you name a song, and the song was just there. Like all of us, I remember that conversation. We're like, how do we invest in this? Yeah.
Still magic. I still use that app more than anything in terms of attention.
Their video product, though, has killed the performance of the app. Killed it.
I don't use the video.
So if you're listening to a podcast with their video on,
why would you watch a video?
Like Joe Rogan, you could watch.
And a lot of them do it now. And any time you have a video up, it comes up automatically unless you turn that setting off, which I've now done. I don't think you can turn it off when you're on Wi-Fi, but if you open the app in the middle of listening, it'll just pick a random spot earlier in the episode and just go back to that. It's incredible. It's retention mode.
If you think about Spotify and again Web 2, Web 3, Web 2 is still strong. Like Spotify brings so much joy to my life. The guy has had to compete against monopolies. He's still the original founder. He's in 100 countries.
Daniel Ek.
Yeah, bet on that guy.
I mean, I'm just saying Web 2 is awesome. Like, let's help Web 2 companies compete against Apple and Google. Let's not worry about the little guy. Let's let's like embrace some of these brands that are undervalued or are not able to compete in a Web 2 world. That's where you say break up Apple or Google. I mean, at that level, it pisses me off. But you own Apple as your hedge. Like, there's at least a way to play that game. The Web 3 world, we need the Packies and Michael Dudas and certain guys who are coming tonight to the event. We need them writing checks. But we need, because they understand the tech, they talk about it, they play with it, they use it. Like, we need them. But we also need something that actually can explode, like a YouTube or a TikTok.
That has not happened, but that hasn't stopped the amount of advertising, marketing. Well, no, I'm saying like the industry itself is spending tons of money to make this a thing, but it's still a thing with no point other than speculating on the prices.
Yeah.
So the real spending is the brokerages, the exchanges. Like there's nobody like, look at this thing I made and it's here to bring joy to regular people.
Someone will ask me, what should I buy if I got crypto? I go, why don't you buy Coinbase? Treat it like it's trading at 2017 prices. I got 92% of all U.S. retail revenue goes through Coinbase. I know prices are going to zero, but that's why the stock's $50, okay? So you can go speculate on Bitcoin right now in the public market. It pays zero commission. Yeah, it could go to zero Coinbase, but that's what investing is. But you got almost venture-like returns. You go put $200 on Coinbase today. Yeah, you could lose $200 if it goes to zero. But I also think it could be $800, okay? So there's ways to treat there's ways right now to play the public market that are almost as good as VC market. Because I can go buy Zoom at 6 times sales, but the startup version of it's 100 times sales.
That's amazing to me.
It's amazing to me. So I'm saying like we could use our heads.
It's the opposite of what it used to be.
Are these crossovers crossing back over into public markets?
I think they are, but it's this whole subject's fascinating to me. Like what Packy and these guys did on Substack and creating blogs, because I was writing checks into you guys. So I wasn't writing checks through our fund, but I was writing personal checks into guys like Packy and Niv and Banana Capital. And I'm like, I was firing off my own YOLO checks as Schmuck Insurance, not because I think they're right or wrong, because I wanted to be in the game. I'm reading Packy's blog. I don't get what he's doing, and I don't begrudge him because I can take that risk. Was I willing to put my LP's money in that? No. Right? Because if I want to blow up 25, 50 grand of my own money, that's my speculation. That's how I learn. I think what happened is we have people of stewards of capital doing that, and that's a mistake. And Tiger shouldn't be doing that, right? Like they knew what they were doing, and that's
Tiger's
why I
doing
make fun of Tiger.
Tiger's doing that for insurance
Now
companies.
go back to your
very
Fed
different.
thing. Go back to your Fed thing. If you would, let's look back at when SoftBank did WeWork, and when SoftBank blew up with WeWork, we thought that was the top.
Yeah,
if you
right.
had told me that SoftBank blowing up with WeWork
That blew a
would
bubble.
lead to 10
How?
SoftBanks,
Yeah.
that was a bet no one made. And that's
That's
what we're living with right now.
2017.
We're living in a
18.
world.
Oh my
So let's
God.
think about how far this bubble went. That was the top. Let's face it. That was the top of Web 2. Okay? We are still above those prices with 9 more SoftBanks in market.
Yeah.
We have a lot of capital. Like you said, well, when's it going to end? We got to get below, like that money's got to burn somehow. And not to be bearish because I'm bullish, but like, you got to know what the playing field looks like. And there is so much capital.
Howard, doesn't that process take place though over such a long period of time? Because let's say a company raised money at 5x the valuation they should have. Now they have 11 months worth of capital in the bank.
Yeah.
So they're not going to like give up.
And they're
Oh,
not
they
gonna give
have
up, but let me
24,
tell you what
30,
happens.
24, 30 months of
everybody is-
capital.
Every single company in the portfolio is emailing now and saying, we're at 18 months
Here's how many
runway.
months.
We're
Yeah.
at 24 to 30
Because
months
why?
runway
Because they
now.
cut expenses, stopped hiring, and
Stop sending as much
That
on
doesn't
growth.
mean it's a good thing.
No, but
No, but I'm just
my
saying it's gonna
point is
take
it's
longer
not
for those to
instant.
work
It's not
out.
like, oh shit, we fucked up, it's over. They have years to either
me
wait
just-
for the environment to turn or
Young
get
companies don't.
rational
They're going to run
about-
out of money.
Let me give you an example. My
Until
own
it
mistake.
depends how
Let
much
me just
they
talk
raised.
about my own journey. Okay, stock twits. Okay.
Yeah, because we haven't
I
really
made
heard
the
much
same
from you
mistake.
today so far. So
I don't
really-
come on every day, and I don't have my own podcast.
Yeah, you
You
do.
do have a podcast.
but
We're
I
going to
never
plug
talk.
it.
That's true. I
The
love your
whole point of
podcast.
my podcast is not to talk.
Fair.
Okay, so and you can edit this
He
out.
comes on our podcast to have his own
trying to
podcast.
educate. I'm trying to educate. Your audience needs education. So listen to this. I'm just trying to be honest. So StockTwits comes along. I sell Wall Strip. Everybody's throwing money at me. And for a minute, I thought I was smart. And let me tell you, I'm the living proof of how long a cycle could go on. I love StockTwits. I love Rishi. All the people that have been Justin. They'll be at the event. Phil. If I could do it over again, the smartest thing I would have done is
Fire
not
Phil.
not hire Phil, of course, and save spit.
Go right
Lucky
to
there
Rishi.
wasn't COVID back then.
Skip right over to Rishi.
Skip right to Rishi. Lucky there wasn't COVID then, because Phil would have given it to everybody in the city.
Just seeing him tonight.
He's got the guy was spitting before spitting was cool. The fact that we overfunded StockTwits for its era has led to 12 years of us trying to grow into a valuation based on the business model. Do we want all? There's not a lot of, that's not a journey that I want to send kids. Are kids really prepared to be at something for 12 years?
Hell no.
Exactly.
No.
And
12
VCs
months.
need to ask that question.
What's
When
the
we're
wait,
sitting
what's
in
the
a board
que-
meeting in
what's the
10
question?
years, are you going to be just as excited about this?
10 years.
And are you going to find a board member that wants to sit with you making 8% IRR over those 10 years while you grow into that valuation? We've sent a lot of founders out in the world that look like StockTwits, way more than I was. We've sent 1,000 times more StockTwits out into the world.
What do you mean
with
by
this
that?
money?
So now they
Meaning-
raised too
got
much
it.
and a too high
Because
valuation.
at least with StockTwits, I could go on Twitter and get users and not spend money. Now these kids have money. Should they burn it on overpriced customer acquisition, or should they just give it back? I
So
have
what
founders calling me
happens?
saying, "I'm just going to wind down and give
What happens
everybody
to all that money
70%
that's
of the
been
money." I
raised
thank them.
in subprime companies? What happens to them?
Well, good founders will give it back and just say,
They're not
"I'm gonna
giving it
move on."
back.
I'm saying good VCs will go to their guys and say, we should reset right now and reset the table stakes. The ones that are later on are harder. I'm just saying as investors, we got to be patient. Like I
can
would
also
say to
set-
Packy, say no to a lot more deals, which it sounds like he's doing on his own. Because just because you shouldn't say yes just because the price was set by somebody else, because you got to think about your long-term IRR and you got to think about your DPI. And DPI is the cash on cash return. And we have to start thinking about that, or LPs are going to get pissed. And then this whole cycle gets worse and worse and worse because we need venture capital in the system for the public markets to work. And that's what got me so excited about the last cycle. I knew there were hundreds of companies coming. And so it was a great run. Now I'm worried because we haven't primed the pump with anything good because we don't have platforms to launch them. There's no YouTube, Facebook, LinkedIn. And there's over expectations. And the public markets are basically shut because of interest rates. So there's a real dilemma.
How long do you, I mean, like, this is the question. How long do you think it lasts? And then what do you think, I mean, like, obviously no crystal ball, next cycle looks like? Because every crash has come back higher.
This
interest
doesn't
rate.
stop until the Fed stops raising rates. I think it's that
Yeah.
simple.
That-
But
I
eventually,
agree with.
politics, the regime will change. And the way the Fed has been politicized is it's hard to bet that the Fed won't switch eventually.
If your
At least they're in a position to cut.
Your
soon, aren't
companies
they,
have to
next
make
year,
it to
maybe?
2024 when the Fed cuts rates, and then we're back. Then we're back.
I go to this Fred Wilson thing. Go read Fred's post like a month ago. He said it's going to take 18 months. Like,
Till we cut.
and
Yeah.
If you ask me today, I said go read Fred Wilson's post from 2 months ago. When he's wrong, we'll know. But like smart people
We
have
also, though,
predictions.
passed legislation that made it easier for regular people to invest in pre-IPO companies. And I think that opened the floodgates to a lot of crowdfunding. And the Jobs Act specifically was about, hey, this shouldn't only be for billionaires. Regular people should have the opportunity to invest in pre-IPO companies and capture more of the upside. So that was, I think, one of the defining characteristics of this cycle. And a lot of people either became angel investors or started angel funds. And it was good. I think on balance, it was a good thing. And now it's the educational part. Like, oh, not everything goes straight up. I wanted to ask you guys about down rounds because it seems to be the entire premise of this is you can't have a down. If you have a down round, it's almost like, which is obviously bullshit because in the stock market, stocks go up and down. Yeah. Why can't we have down rounds that aren't a mark of shame in the private markets? Is that something that's about to happen where that gets normalized and people are like, yeah, I raised higher before, I need more capital, I'm raising lower, no big deal. Are we going to get to that point?
I mean, I guess one is that employee options are underwater and employees end up being the ones who get hurt the worst. I think when things like this happen, even founders, if the VCs like them, can kind of renegotiate their package and do all that, but the employees are the ones who end up getting hurt. And so I think retention becomes a challenge in this market.
With the down round. That's part of the stigma. Right.
Part of the stigma is that, and part of the stigma is if everything's going up and you do a down round, then
okay, so
you're
that's
the
not
company.
the problem
so
right now.
In this market, right. I think we'll see a bunch of down rounds if people need to raise money. I don't know. Your point on preemptive down round and just getting it out of the way now. Have you seen anybody doing that? That seems trickier. I do think that in 12 months, 8 months, 6 months.
Somebody has to be first.
It's trickier because they had these party rounds. It's not trickier if you have professional investors on your cap table. So I've done it twice. Did it with StockTwits. That's not fun where you tell your friends that were investors that they got to put more money in or they're going to get recapped. But it's an adult thing that happens, right? Right? Like you didn't yell at me. Like we had a recap.
I'm still mad.
Yeah, but you didn't yell. There's a difference between.
No, you know what I did actually? I called Ian Rosen and I made a list of demands.
He won't be there tonight. Okay. So we have to get through this part of it. Okay, like. It happens.
No, but here's.
I did it. Alpaca. I've done a recap. I don't want it. I'm not a private equity guy, so. I've been through it twice. I won't invest in an overpriced round because I don't want to go through a recap.
Here's what I want to ask you. New money doesn't come into a down round. A down round is almost always people who are already trapped, basically trying to make the best of a good situation.
It just depends who the founder is. And when we did Alpaca, it was all new money after we squeezed out Y Combinator and a bunch of people. Like I remember with Yoshi, and I've talked about this story,
Right.
He came to me, pitched me his YC deal, 3 on 17. I said, pass. Like, I love you. And then he came back 6 months later, and it was a $6 million round. And I said, go fall on your sword, go clean up the cap table. I told him what to do. And guess what? He did it. And so when he came back, we honored our term sheet, and we did a $3 million round at 6. Now it's a $500 million company.
How are you passing on deals that, like, on companies that you really like?
What's like mean?
Companies that you think are very attractive. Just fundamentally.
It has to, again, I work for my LPs. So this is what I'm trying to tell other, because we have an emerging manager fund right now. And I'm like trying to say, do you like it as an 11% IRR? Because you can go buy the S&P index fund. You have to think about what this looks like at the end of 10 years. What's the IRR could look like? And what could my ownership look like? Liking it is why we're in a problem. Not understanding how cap tables look and what exit looks at a certain valuation went away. But you can go look at Bill Gurley or Fred Wilson, and they talk about portfolio construction, right? If you invest at seed stage rounds at $3 million or $6 million and get out at $1 billion versus a $20 million and get out at $1 billion, just go look at the math. And you'll say, shit, I might as well put my money in the QQQs or something else. If people just looked at those cap tables that have been, those guys have built those things out on the open web, go look at it and just run your own numbers. And then then decide what liking is. So there's liking, and then there's liking where everybody
like
can
the
make
company,
money.
but not like it as an investment.
Correct.
Right. Well, it's hard because what
Shouldn't
initially
be hard. There's math.
But what initially attracts you to that investment is that you like what the company's doing.
So
Or
this
you like
goes
the
to
founder,
Twitter. This
or
is
you
what
like the
makes Fred
product.
Wilson the best investor. He still did Twitter at 20 because I couldn't see it being worth $400 million in 2007 because I was like, how am I going to make 20 times
And he
my
owned a
money?
lot. He owned a lot
He
of it.
understood that $400 million, this is going to be $4 billion. I don't have that ability. I'm not Fred Wilson. So if you're not Fred Wilson, be honest with yourself and realize that price does matter. To Fred Wilson, it may not matter because he's seen patterns that we don't understand. And there's other Fred Wilson. I'm just saying I'm not that good, so I have to worry about price.
Hard pivot. Sergey Brin is going through a divorce. Net worth is $93 billion. I don't think there's a prenup there. It seems like this could be the biggest divorce of all time, dollar-wise.
Chris Rock
Bezos.
says it's 70%.
Other than
Chris Rock was doing a
Gates,
podcast. He goes, not
Bezos.
50%. It cost me 70.
All right.
So 70, he's going to lose $60 billion.
How long have you been married for?
5 years.
Okay. How long you and Ellen? 25?
500?
400 or 500 years?
No, 26 years.
So this is my theory here, and we talk to high net worth investors. They're not $93 billion, but there are divorces, there are separations, and from what I've seen, I think, and I don't know what the number is, but there comes a certain dollar amount where you no longer have to make any compromises as a couple, and you could almost live separate lives because you never have to say no to anything. Like, I don't know what the number is. I'm sure it doesn't mean 93 billion. Let's say it's $1 billion. I could do whatever I want with my time. Any hobby I pursue, I could buy everything, boats, you name it. And then my wife, same thing. She could do whatever the hell she wants. We never have to struggle. We never have to have a compromise with each other. We never have to sit down and say, look, I know you really wanted to do this, but we have to do that, right? I know you really wanted to go to Paris, but I promised the kids I would take them to London. In these cases, it's it, let's do both. And let's actually buy a house in both cities. Right. So if you never have to do that with your spouse, the question is like, can any marriage survive billions and billions of dollars? It seems like in the last 5
I'm willing
years,
to try that.
every famous hedge fund manager, every famous tech billion, they're all divorcing like literally within the last 5 years. It appears to me. Let's hear from you. What do you
We hear
think?
From Ellen?
Let's get Ellen on the.
We have a caller. Ellen, we have a lifeline.
What do you think? Like, can any marriage? Like,
can't win that
picture
answer. I'm
yourself
not
in
even
that
answering
situation. How do you survive that much money?
I can't even imagine.
No, of
having
course.
that
But
much.
I'm giving it to you hypothetically right now. You and your wife never have to make a joint decision on anything. You could both do whatever you want, to the point of living separate lives.
You have people watching the kid all the time.
Yeah.
It feels like the family just gets
Once you get to a certain number, you're a public figure, and if you have $1 billion, you're probably literally every single person in your vicinity, surrounding area, knows that you have $1 billion. You can't hide $1 billion.
can't hide $1 billion.
You have unlimited choice. This is not good.
No.
You have women chasing you at any time. This
This is
anywhere
try
you
writing
go.
a newsletter professionally. This is my life.
Yeah, no. I know we're getting very
See my
close to
DM.
reality.
You should see my DM. You should see the type of creeps that come into my DM.
But
none of them women.
But so you have
and you think that
unlimited
you're the-
choice, and it's not good.
And you think you're God on top of that.
By the way, Ellen and I
right,
do
forget
have
what it does to your personality.
Totally.
Ellen,
Yeah.
we talk about money all the time. Like, let's be honest. Like, you talk about with your wife money all the time.
I am told about money from my wife. It's different.
We talk about it, and I always said, like, what's the number? Like, what's the number that we all stress
Wait,
out
what's the number that what?
that you feel comfortable where you just don't have to argue over every little purchase.
You're
right?
not. You're there. You've been
What do you
there.
mean?
You've been there.
That's what I'm saying. We talk about it all the time.
Right.
Because in the end, as soon as you make money, guess where it goes? The government or your kids. So in the end, my kids have all my money because that's how the government works. I had a choice to put the money in a slat or a trust, and you guys do this for people.
Mm-hmm.
Unless that's the real honest discussion. We don't know. His money's given away already.
Yeah.
So their fight will be different because guess what? They may not have the money, hopefully, in their kids' names. And their lawyers, when they set up those slats, were like, when you do this, guess what? Like, Are you sure you want to do
You've
this?
given up your access
Yeah,
to this
so
money.
I'm saying these are different type of arguments.
We need
But
slots on the blockchain. They're immutable.
Yeah, I don't even still know what a revocable, irrevocable thing is. I just feel like it's America set up that you give it to your kids or you give it to the government. That's not a hard choice. You give it to your kids.
You give some away. People give some away.
Yeah, they set up these donor funds or whatever.
Bezos divorced a couple of years ago. Bill Gates the last year.
Johnny Depp.
Elon Musk is on his third divorce, brand new one.
Murdoch just got divorced.
These are all billionaire. Murdoch this week.
One other thing.
But that's just math. 50% of people or 60% get divorced. I mean,
Sergey Brin got married in 2018.
Yeah,
so
God bless.
They made it 4 years. Why even bother?
Oh, you're definitely more likely to get divorced at higher incomes or net worth.
Yeah.
There's no doubt.
It's right. So I think because I don't know what the number
Where's
is.
the line?
But
It's probably not that high.
I feel like
50?
the less friction there is surrounding money, the less opportunity there is to actually have a marriage based on like that kind of part, that universal, like we have to do this together. We have to be on the same page. If you don't have to be on the same page about anything, then and you have so much money that you have just endless choice, then why even?
I don't have that problem yet, but it'd be a nice problem to have. I just think
Would
if you have money young, it is harder because
Yeah.
you go spend it on stupid stuff. And in a pre-cloud world, there was just so many bad ways to spend money. In a cloud world, it's hard to spend money. Like you don't need a plane, right? You don't even need to fly business class anymore. Like the point is, you can put up with 7 hours in coach if you have to. Like I like flying business class to Europe. At $12,000, I'll do coach and stay at a nicer hotel. Like the prices will determine. And that's why inflation and interest rates really are the discussion, because the one thing I liked doing when I made a little money was going business class to Europe. And then when I saw recently, I went to Amsterdam, $12,000, f- it, 2 Ambien and a better hotel.
When are you going? Are you going to Europe this summer?
Yeah.
When do you leave?
September?
Oh, you're going late.
Nice.
Yeah.
Okay. Where are you all summer? Are you in U.S.?
San Diego. Yeah.
San Diego.
Yeah.
Okay.
But prices, flying is crazy right now.
I'm going to Italy this summer.
You'll have a ball.
Forget about flying. Hotel prices.
Crazy?
Holy shit.
Yeah. So that's inflation. That's really the discussion, right? Like we've really, there was inflation in travel already. They're really bad.
This morning, I noticed my coffee was $3.40. I got a 12 ounce,
Dunkin'?
12 ounce from Starbucks. I said, wait, what?
Ooh,
I remember
money.
paying $2.12.
Water.
$3.40 for a small coffee. That's
So that's the real problem. Like Max, who lives on a budget, our son, right? And he's a good kid, doesn't spend a lot of money. Like he called me like a couple months ago, Dad, I'm like way short, because he drives a lot. And he didn't realize that like $200 a month became $800 a month.
Yeah.
You know what I mean? And he
Yeah.
was short. And so
And it
if
happened
my
quick.
son's short $500 a month, like out of the blue, he now knows about the economy. So it was a good lesson. But luckily we can afford to help our kid. Multiply that times millions of families that can't afford that. Like we should be. That's why we're in trouble. And we are talking about goofy stuff when like my son is the people that can't afford to do that, or my daughter living on the Upper East. Like she has an education, and like we have to support. She feels bad, but I'm like treat it like university. I'm sure New York's always been this way, but $4,000 for Upper East. That's crazy money.
It's always been that way.
Okay, but I'm saying like oil is the first time that my son got woke to like
Put him on the Upper East. He won't need gasoline anymore. He'll just need.
But kids are going to figure this out. They're going to live. They live experiential lives.
Yeah.
They figure out how to get by. But the oil is a big one.
When I was Max's age, we were living through 9/11. So every generation has their shit they have to live through.
Did you see the video of the people in the long line for the apartment, like shithole apartment in New York? The line was, I think, 3 stories of people waiting.
That's
to go
2
see
years
this.
after New York City is dead, by the way, which is really incredible.
That was the greatest. I think the
Oh,
greatest
Altucher's
essay.
post?
Yeah.
What a dick. Where is he? You
I
talk
think he
to him?
meant to. Nah, I haven't
Who are you
talked to
talking
him
about?
forever.
He means to provoke. You know.
That's what I'm saying.
Who are you
Yeah.
talking
I
about?
did that on purpose.
Altitude.
We're Jerry Seinfeld.
New York City is dead
oh,
forever.
oh.
But that was a hell of a blog post to get everybody to comment on.
If you right, so he won. That's all he
wins.
wants
He
to
trolled.
do. Right.
He's a good troll.
He's coming back for Web 4. Something tells
He
me.
has a comedy club.
Yeah, no, I
physical
know.
one.
I know
Physical
that.
one.
I know that.
Yeah.
All right. I think we're gonna wrap. We're gonna do favorites though. We're gonna do. You've been on the show before. Books, movies, TV shows, whatever you're into these days. Doesn't even have to be that. Podcasts. Like, what do you got for us on favorites?
I'm not a podcast guy. I love Smartless for whatever reason.
Yeah.
Because I'm not even fans of them. I just love the guests and the way.
It's great.
Yeah, they're good.
Who have they had on recently?
They had on the guy. I have so many senior moments. The good-looking guy from what?
Rob Lowe?
No, the good-looking guy.
What?
That
He's
narrows it
good-looking.
down.
Michael
from,
Batnick.
He was just on.
from the wedding movie where they all go.
Wedding movie. You're so old.
Bradley Cooper.
Yeah, they have Bradley Cooper.
Oh my!
I'd be so
God.
bad on Pyramid Square
how
or
I
wherever it was.
Pyramid
Wedding
Square.
Crashers.
On Good Times with Jimmy Carter.
You'd be terrible on Pyramid
My
Squares, I
memory
agree.
is gone, but that was
What else can't you remember that you liked?
the Peaky Blinders is okay. Season 7 or 6.
Did they put all the episodes out? Or
Oh,
Yeah,
Staircase.
Peaky Blinders.
I gotta
put,
watch that.
All the
It's my favorite
episodes out.
show.
Yeah, it's very good. I feel like I now feel like smoking again after watching Peaky Blinders.
That's all they do is smoke and kill people.
And then the Top Gun movie wasn't bad.
Oh come on! It was so good.
It was so good.
I said it wasn't bad. That's a good rating by me.
That's an A+. Packy, what do you got for
All
us
right, so
today?
I am on a Mars kick a little bit right now.
Okay.
So I'm reading Red Mars by Kim Stanley Robinson, same person who wrote The Ministry for the Future. All kind of like nearish sci-fi. This one, they go to Mars in 20 years from now, and they're debating whether to terraform it or keep it the same. Or super interesting. And watching For All Mankind on Apple.
Is it good?
Apple TV. I really
Old,
like
right?
it.
It's an old show.
It's actually, I think we're on season 4.
3?
Oh, so it's like keeps going.
It just keeps going.
Is it
I
good?
just heard about this, but this is like the Man in the High Castle. How that was if the war had turned out differently. This is if the Russians beat the Americans to space,
Oh, I love shit like that.
and then we just like kind of kept competing, and then we actually just for the past 50 years continued to go to space. That one's really really cool.
Did you read Project Hail Mary?
Read Project Hail Mary.
They're making a movie out of that. Who's going to play the Spider Rock? How's that going to work? I swear to God, they're making a movie out of
I
that.
think it'll be the dinosaur from the Dinosaur Show. That's kind of what I was picturing the whole time I was reading it.
Wait, what's Project Hail Mary?
It's by the same guy that did the
Andy
Martian.
Weir, yeah, the same guy who did The Martian. Those books are cool because the guy's like,
so good.
somebody wakes up on a
Martian's the movie
spaceship.
with Matt Damon?
Exactly.
Yeah.
And so this one, somebody wakes up on a spaceship and they're like trying to figure out their memory is gone, and they're trying to figure out using like math and physics, like what the hell is going on, and then he meets an alien. It's
great.
It was a really good book. I didn't know they were making a movie.
Yeah.
That'd be
I
really
think
good.
Ryan Gosling's playing the character.
Batnick, what do you got for us?
The handsome guy from the movie with the
Yeah. I saw the first 2 episodes of The Old Man on Hulu with Jeff Bridges and
didn't catch that yet.
John
Was it good?
John Lithgow. I'm intrigued. I like where they're going. Too early to say. I don't want to say one way or the other. But the Bob Saget tribute.
It's good.
So on stage was
Was that on?
Yeah, it's, Netflix.
Okay.
So Jeff Ross and I forget who else was hosting, but at one point, Chris Rock and Jim Carrey were on stage together, just bullshitting, and it was just seeing that was sort of surreal because you never see them together like that. So that was good.
Did you see the Netflix Hall of Fame? They created their own comedy Hall of Fame too, and they put in Richard Pryor and George Carlin and
What
Joan
they put
Rivers.
the old videos up of?
No, they elected for Robin Williams. They created their own like Rock and Roll Hall of Fame for comics themselves, which again is part of comedians
That's cool.
pushing back. And they picked 4 great people to be in the first one.
Did
Joan
you watch that
Rivers.
yet? The George Carlin documentary?
Yes, loved it.
How good was
I'm
that?
going to watch it again. Loved it.
Judd Apatow did that. Like obviously,
I
Carlin's,
need to
but it
watch
was
that.
so well done, wasn't it?
We need
Yeah.
more. That's another thing that I say. We need more Judd Apatows, right?
He's
like
one of
the
a
world
kind.
Needs to, but there's more. Like that's part of Web3 too. We need more people like that.
Well,
They're
we
out
should be
there.
we should be
They're out
we should be
there.
crowdfunding movies.
But they're out there.
Yeah.
There's Judd Apatows out
Well,
there.
we
man,
need
who
more-
have great domain experience, like you guys with finance. Like you and I did a documentary. It's phenomenal.
When is that
Like
coming?
we have one coming out.
When is that coming
the guy
out?
did such a great job.
What's the latest
month or
on this?
so?
Okay.
What are
really?
you talk? What the are you talking about?
Howard.
I funded a documentary that
It's
Josh
like,
came and did.
produced a documentary.
About
and
what?
it's called "This Is Not Financial."
It's about my
Advice.
early childhood.
No, what is it about?
It started out about GameStop and ended up being a movie about a kid trading Dogecoin, and it's like reminiscence of a stock operator 2.0. There's so many lessons
Doji.
from this movie.
It's going to be dope.
It's dope. We showed the 9 minutes at Palooza at my event.
Okay.
The audience went
Come on.
bananas.
Really? Was I in any of that?
You left. You worked hard. You will not be thrilled but you were the only one was not cut a lot.
Okay.
Because the story turned.
Wait, why won't I be thrilled? Did I say
because
anything
you
that turned out
spent
to be
such
wrong?
amount of time helping us, and
Okay.
you got cut a lot.
I have a friend.
But that's how movies work. I had to learn
Yeah.
how it works. But this arc of what Doji did.
Who the f is Doge? I've heard Doge,
No,
Doggy.
whatever.
You're a Doji
But
guy?
What Doji did is what the market. It's like and follow a couple of the arcs of some of these people.
All these people that commented
Wrote
for the
it
movie
up.
got cut out.
Yeah.
And they're all mad at you.
No, they're not
Okay.
mad. I'm just saying that's how I don't know how a documentary works.
No, me either.
Because the story changes.
Right.
But the stories, it's just been such a learning experience funding a documentary. I don't think I would do it again because they take too long. But like,
As I say, when did we film this last summer?
Yeah.
Yeah, they got to put this up on
but
YouTube.
no, but because stories take time to develop,
Yeah.
and that's movies are documentaries are amazing, but like being involved in it not as fun because it takes 2 years.
Totally.
Like it's like a startup.
Yes, totally agree.
what are you watching?
I just finished Obi-Wan Kenobi.
It sucked. It's so disappointing.
I don't like the way they use Darth Vader.
So disappointing.
I feel like he should be on the big screen only.
You're stealing my take. That's my take.
No, but you're right.
Yeah, thank
They
you.
were very casual with him, like almost like he's taking cell phone calls.
He's too big for the small screen.
Yeah.
It's Darth Vader. You don't put him on it's disrespectful.
But he's not even like he's not even an important character
Although
in the show.
the last fight scene with Obi at episode 6 was good.
It's just I don't love how they did that.
Cheap. It's cheap.
They're also like forging all these connections between
cheap.
the characters.
No,
that-
they're ruining it. They're ruining it.
It's like it's too convenient.
They're
It
ruining
shrinks
it.
the
They're ruining
universe
it. They're
that all
ruining
these
it.
people knew each other. So
Am I allowed to ask a question?
Yeah.
To each one of you?
Yeah.
yes.
So what's that one idea that's got you fired up?
Oh man.
Ooh.
I mean, I got to know you're here. I'm going to talk to you after, but we should have asked.
The one
Because we've embarrassed, so let's hear what's exciting.
I got one. I'll
Yeah.
let you think. The one thing
Unibonds.
Right, the two idiots. And by the way, high five, we're right. But let's hear what the young'uns say.
So this is a shameless plug. I'm excited for our conference, Future Proof. We're gonna.
I
Oh,
can't
shit.
be there. I think I'm going to be out of
You're
town.
gonna be you're gonna be
We got
early.
2,000 financial advisors there. All the fintech demos, the stuff that Howard won't be funded, but we will. We're super excited for that.
Yeah.
What do you got?
Well, I'm excited for you. I just
Thank
can't
you.
be
Yeah,
there.
next time.
I'm super bullish on
Send,
your industry.
send what's his name? Send Tom.
Matt or Don?
Don.
Matt.
Yeah,
And
Don.
Matt.
Yeah.
Send them both.
Yeah, of course.
Yeah. Comp.
So let's just talk because like what
Yeah.
like
For me, I think so. I brought on these two guys part time. One who's doing kind of biotech, and one who's doing kind of space and deep tech side of things. And one, I think both of just those broad areas are super fascinating. But two, just getting to learn from these like young guys who are, the one guy is a PhD candidate in genetics at Stanford right now, and so he's like in it doing the science, but also has a little bit of an investing background, and just getting to kind of learn from him in real time what's going on there, what's happening with kind of people starting to use RNA as kind of a therapeutic for a whole lot of things. Like there's just a lot of fascinating stuff going on in we'll stick with biotech on this one in particular. So just learning about that world, which I had very little exposure to, has been a lot of fun.
what are you most fired up about?
what I'm working on myself.
Comedy. Okay.
'Cause,
Can we tell people what it's called?
Yeah, Laugh Lounge.
Laugh Lounge.
Yeah. and
Okay.
it's just a comedy NFTs, and
Are they for sale yet?
No.
Okay.
And it's not that they'll be it's a membership thing, and I think we're just going to just have so much fun with it. It's for people who love comedy, and it's for goofballs that maybe want to be in comedy and closer to the comedians, and hopefully not offend anybody, but like truly build community around comedy, and hopefully launch a club because it's like building a church. Like we'll raise money and hopefully build a club one day, and we'll show people what it's like. And it's like WeWork or some kind of club for comedy. It's one each for you. So your kids, who I watch on Instagram with you, are they just TikTok? Like what are they? Is it YouTube, TikTok? Like what do you find them spending?
So they use Snap the way you and I use text.
Okay.
They don't text, or they'll text a little bit, but all of their groups are set up in Snap, and they will never leave. And I'm actually
Not iMessage?
No,
Okay.
they will never leave Snap. Snap is to them what SMS text is to
staple.
us. Instagram, they don't post at all.
Right.
But
they
follow
voyeur.
celebrities on Instagram, but it's almost they will put up stories, but their timelines are empty. Kids are not leaving stuff up, and they're just not they're not that into the likes that they get from putting up posts. So they're putting up stories and they're talking to each other back and forth via story.
And then TikTok.
TikTok is like just mindlessly
But they're on it
like,
the most.
all the time.
You know, I want
Just
to. I
scrolling
want
Do you
up,
use
up,
TikTok?
up. Yeah, I'm a verified
No, but do you
TikTok
use it?
user. Like, do I sit on it?
Yeah, and scroll.
It's not that interesting to me.
Your kids are too young.
No, but I want to.
I get it. I just don't-
want to amend my answer. I'm fired up about raising my kids. I've got a 5 and a 3,
Fun, man. Enjoy it.
and this is like the most amazing time ever.
Yeah.
And credit to you again. What you wrote on your blog the other day about Ellen and you guys are over the hump, and you did a
Yeah.
good job. That was very sweet.
I don't know if we did. I was saying more that we don't have a choice anymore. We did what we did, and they're gone.
Right.
You did a good job.
Yeah, we
did a good
job. We did a good job because I still traveled a lot. Like she had to do her more than me for years, but like they like us.
Let me quote you.
Yeah.
Let me
And they
quote
like
you to yourself. You said, "My kids are out of the house, and most of my opportunity to be a great father is gone. I had my time based on how they treat me, Ellen, each other, and other people. I think we did great." That was very sweet.
Yeah. And by the way, like my daughter was, she'll DM me sometimes. She goes, "You're on fire today." I mean, how great is that? Like, not like you embarrass the out of me when you get off Twitter. Like, almost like I'm like, she's too nice
Where
to
is
me.
she? She's following you on Twitter?
Well, she does Twitter for Rally and she goofs
Yeah.
and stuff, but she doesn't like doing it. But she gets me a little bit, and she's not embarrassed by me. And the same with my son. Like, I don't embarrass him. So I mean, that would be horrifying. Like I got yelled at on the internet. I'm talking too much today or whatever. But like, to not embarrass him is cool.
Oh, Packy, you have it too. How much comfort was he that the rough week a couple of weeks ago?
Oh my God. So yeah, he was in the hospital
Yeah.
a couple of weeks ago. 3 days, totally fine. It was bronchiolitis, so like we knew the whole time he was fine. He's the best. I mean, he's like just sitting in the bed, like IV in, oxygen in, just like laughing and trying to get out of the bed, and the whole. He's the absolute best. It's like I feel like we're in a spot now, kind of from 18 months on, where he's like saying full sentences and he's just becoming this like little person. It's the absolute
best.
What are
best.
you,
The best.
2 and 6?
I've got a 3 and a 5, and it is just beyond joy.
It really is.
The 4 till 14 is heaven. Rachel never went
I was going to
through
say
anything.
4.
Rachel
I was going to
always
say
liked
like
me.
0 to 12.
Okay, for me,
And then-
Rachel's been perfect the whole time, meaning
Yeah.
she's like me. And Max went from 14, wanted to see me dead until recently. But getting over the hump with Max
I'm in
has
the.
been
I think
heaven.
I'm in the toughest. I think I'm other than when they're infants and you
How
can't
old
put
is
them down.
Tara? 15?
This is it. This is
Yeah,
the
it's
hardest
tough.
it's ever been for me.
It's tough.
16 and 13.
Yeah.
They fucking hate me, hate my wife, hate each other, hate their friends.
Yeah.
Hate
That's tough
school,
for them.
hate camp.
COVID was tough for that age.
I mean, they just their negativity feed their when they get silly together, and it feeds on, and it's adorable, and I love seeing them like happy, but then it works the other way. If one of them is going through some shit or is in a bad mood, it's infectious, and then the other one becomes like sullen and don't close my door. Don't look at me. Don't talk, stop asking me And I get it because I was that until about like 3 years ago.
Well, here's what I would.
But it's hard.
Here's what
It's
I would
very
give you
hard.
advice, because I'm on like so many different sides of this. So I have friends who are in their late 50s who are doing it a second time.
Yeah,
I'm
no.
like, oh my
Later
God.
for that shit.
Oh my God.
Yeah. There's no way.
And they'll complain to me. I say, hang on, I didn't advise you to get married a second time, and I'm not coming to your bouncy party for your 1-year-old in
That's
my
right.
50s.
That's right.
I'm
That's rough.
manscaping by myself in the dark.
That's right.
like
We
I
did
do
that
every
already.
day.
We did that already.
Holy are there some mistakes being made by people
Sloppy
my
behavior.
age.
Sloppy behavior.
So enjoy the 2-year-old, whether you're happy with your wife or not, and enjoy your 13 to 15-year-old and do it once.
Yeah.
And be the done, which is what my blog post was about. Like, man, I'm so happy that I don't have to do it again.
Oh no. There won't be. It's medically impossible.
But I'm saying you have one chance to do it. I'm hanging out with my nephew today. Like, I love my nieces and nephew. Like, I mean, and in the end, we're all going to be in the recruiting business, because in the end, we're all going to know enough companies, and we all have these great networks, and we all want our smart kids working for our smart companies.
Yep.
So really, we all end up in the recruiting business, which is what the joy of my life is right now. Is like, these kids are smart. These 20 to 25-year-olds are actually smart, and they want to work hard. So we're basically all in the placement age. It's like, I can't believe how many opportunities there are for kids our age. And so part of our job is making sure we just get them to this age, right? Because it gets better. Because there's so many great jobs. Like seeing Rachel work in Soho and seeing Max in Montana, like they're very different kids, and there's just so many opportunities for kids if we just get them launched, right? So like watching you guys raise your kids is hysterical to me, because I know you're kind of enjoying it, but I also know the hell
it's
that's
both.
going
No,
on.
I'm in love right now. I'm in the sweet spot.
At any given day, it's one or the other, or some combination of the two. But that's what we're doing. So
Yeah.
we're gonna leave it there. Did you guys have fun today? guys have yes?
This is the best.
This was transformative for you, I feel like.
I'm never going to do another investment again, but
Wait a minute.
I'm waiting for 3 and 6.
He's going to sit in cash for the next cycle. If that's okay with you.